SIPs, systematic investment plans, as your secret weapon to building wealth over time. Whether you're just starting out or you've been investing for a while, understanding the ins and outs of SIPs can make a huge difference in your journey. We're going to break down everything you need to know about SIPs, from how they work to the risks involved. Let's dive in. So, what exactly is a SIP? Imagine trying to time the stock market, trying to buy low and sell high. It's incredibly difficult, even for experienced investors. That's where SIPs come in. Instead of investing a large chunk of money all at once, a SIP lets you invest a fixed amount regularly, like clockwork. It's like setting up an automatic transfer into your investment account every month. Now, the beauty of SIPs is that they take advantage of something called rupee cost averaging. Think about it. When the market is down, your fixed investment amount buys you more units. And when the market is up, you buy fewer units. Over time, this strategy averages out the cost of your investments, potentially giving you a better return in the long run. Just like clockwork, you're investing consistently, month after month, regardless of market conditions. This disciplined approach takes the emotion out of investing and helps you stay committed to your financial goals. Let's talk about why SIPs are such a powerful tool for building wealth. First and foremost, SIPs are incredibly convenient. Once you set up your SIP, it's automated. Your money is invested without you having to lift a finger. This automated approach makes SIPs perfect for busy professionals, young earners, or anyone who wants to invest consistently without the hassle of timing the market. Second, SIPs instill a sense of discipline in your investing. We all know that life can get hectic. With a SIP, you're automatically putting money aside for your future, consistently growing your investments. It's like paying yourself first, and that's a habit that can pay off big time in the long run. Now, before you jump into SIPs, it's important to understand the risks involved. Just like any investment, SIPs come with market risks. The value of your investments can go down as well as up, especially in the short term. Remember, SIPs are not a get-rich-quick scheme. They are a long-term investment strategy. It's crucial to have a long-term perspective and not panic if the market experiences short-term fluctuations. Also, it's important to choose your mutual funds carefully. Past performance is not necessarily indicative of future returns, so do your research and select funds that align with your risk tolerance and investment goals. One of the most important things to remember about SIPs is that they are designed for the long haul. The longer you stay invested, the more time your money has to potentially grow. Think of it like planting a tree. It takes time for a tree to grow and bear fruit. You wouldn't plant a tree and expect to harvest fruit the next day, right? The same principle applies to SIPs. In the short term, market fluctuations might seem intimidating. But over the long term, the power of compounding works its magic. As you invest consistently over time, your earnings have the potential to generate even more earnings. It's like a snowball effect that can lead to significant wealth creation over time. Even though SIPs are designed to be automated, it's essential to review your investments periodically. Life is dynamic, and your financial goals and risk tolerance may change over time. Regularly reviewing your SIPs allows you to make adjustments based on your current circumstances. For example, as you get closer to retirement, you might want to adjust your asset allocation to a more conservative approach. Or, if your risk tolerance changes, you might want to explore different fund options. By staying informed and making necessary adjustments, you can ensure that your SIP investments are always aligned with your long-term financial goals. Remember, investing is a journey, not a destination. So there you have it, the top things you need to know about SIPs. By keeping these points in mind, you can make more informed decisions and maximize the potential of your SIP investments. Remember, the key to successful investing is to start early, stay invested for the long term, and